What's going on, guys? This is Bandit FX, and today I'm going to be covering my chart breakdown for gold for June 23rd, 2021 during Asian session. So it's about 6:15 p.m. Eastern time right now. Let's take a look at gold on the monthly time frame. So as you can see, gold on a monthly time frame, we're starting to print a very big bearish candle. There's 6 days left on the month, basically engulfing the last bullish candle that went up. So this is a very bearish move. I'm for the most part looking for sells on gold, short term. So taking a look at the weekly time frame, what this looks like, we had close with no wick on last week's bearish candle. So this candle could either come all the way back up, or this could just be the top wick. So it's just something to keep in mind that the top wick of this candle, if we do break the low, that's going to be our sell confirmation, is a break of this previous candle's low. Looking at the daily time frame, we're starting to range here, and we've ranged here before. So something that I always like to do is to look at previous price action and see where we have ranged, because typically when price ranges in an area, it will do it again and again and again. So um, now that we're getting a little bit closer to clearer price action, I'm just going to go ahead and start marking out these areas. So um, I'm just going to mark this out so you guys can basically see the range I'm talking about in the daily time frame. We were consolidating here before, and we're beginning to do that again. So I typically don't like to trade these ranges and gold just because it's not very clean price action at all. It's very sloppy. Obviously, once we leave this area, the next area that we're going to come to, the next support level is down here by 1728. So that's another area that we could look to see price go. And to the upside, obviously, if we do continue up and break outside of the top of this range, our next area should be around 1869. I mean, yes, we could say 1900 is the next area, but just to play it a little bit safer and look at the safer side of things, this previous support, even though it isn't the most recent price action, is still a significant level. Prices rejected this area multiple times, so that's just something to keep in mind as far as a long position price target. So this is about 1867 right here. So let's break it down to the 4-hour time frame. As you can see, let's spread this out a little bit more. You're starting to see a little bit more in depth of what price has done. So obviously we have a little bit of a resistance right here on the 4-hour time frame. This would be our first target, obviously, to the upside, and the downside would be 1728, as we said before. Um, like I said, this isn't very clean price action at all on the 4-hour time frame. It's very sloppy on the 1 hour as well. Yes, people can take trades in here. I just personally don't like to do it, because if you get caught in one of these consolidation ranges, you're either gonna have to force close your trade just because you're sitting in it for too long, or there's no volume or things like that. So, and a lot of times price will wick up and down and basically ignore the highs and lows of the previous candle. And some people like to call it stop hunting, but it's a possibility, especially if you're the type of person who places your stop loss above or below the previous candle. So yeah, guys, we're just basically in a consolidation at this point. And looking at the 30-minute time frame, although we don't really have to, you'll see that it still is very choppy. I mean, there is clean price action right here that's most recent, but I am more biased to the downside. And the main reason for that before, like I said, is, we're basically consolidating here again, and the market likes to mirror itself. So the market came up from this level, consolidated, and then continued up, came down. I think we're going to consolidate and then continue back to the downside. So, obviously it can break either way, and I will prepare for either scenario to happen, but I am more favorable towards the downside because it does make more sense. So let's see here. Okay. And this is just from a technical standpoint. This is not factoring in fundamentals or anything like that. Technically, I am favoring the downside. Um, I'm going to mark out these levels and label the chart for you guys so you guys can see basically each thing that I'm looking at and the reasons why I have my levels as they are. So one, price is ranging and has ranged here before, like we just talked about. We don't like to trade ranges, and the reason for that being is you're going to take unnecessary losses, and price can be unpredictable when it's consolidating. Second thing is we have the top of our range is 1797, so this is where basically we're going to look for buys. Buys above 1797 with our take profit 1 at 1822. Okay. And to the downside sell scenario, like I said, I like to prepare for both scenarios. Whether it goes up or down, I always have a game plan, providing that it makes sense. And in this area, we do have ranges that are big enough to take trades in both directions comfortably. So let's see, we're going to have sells here below 1761. All right. Let's move this down a little bit so you guys can see. Okay, 1761. Yeah, basically you're going to want a candle close below this level. Or if we're in a high volume session and we start to actually break this low, specifically New York session, sometimes, especially with gold, you really don't get a candle close confirmation like you did here. Price basically was in a high volume session and just broke right through and continued down. So that's just something to keep in mind with gold. Preferably, we want to see the candle close, but that doesn't always happen with something as volatile as gold. But our take profit one target is going to be down here by 1728. Okay, now let's label this. Buys above this level, which is basically the top of the range, like we said. Take profit one is based on this resistance. The sells are obviously once we break through the bottom of the range, preferably with a candle close. If not, if we're in a high volume session, you can take a more aggressive entry in anticipation of this to just break through and continue going once we do make a lower low. So this is, oh, sorry. Let me adjust this. I didn't actually see this real quick. First take profit is actually going to be up here at 1733. Okay. So there we go, guys. This is basically what we're looking at as far as gold goes for Asian session. I don't think we're going to break out of this range. This is just, I mean, just because the area that we're in, this is going to be more of a longer term analysis. My analysis probably won't change for a while. This will probably be the same thing I'm looking at all week unless we do get a break above or below this level. So yeah, guys, that's pretty much it for gold today. Leave a like, leave a comment, and if you haven't already, please subscribe.